As a racing business, we often have to hire contractors in order to fill the gaps of work that our team doesn't have the capacity to do, or maybe they don't have the skill set to do. So in today's episode, I'm going to be discussing how to legally hire a contractor and what happens if you don't follow the law. I'm also going to be sharing best practices that you can do throughout the year to make sure that come January, you're not frantically trying to gather all the information that you need in order to file your 1099. Hi, I'm Liz and I'm a motorsports attorney. Our family also owns a series, a race team, and a motorsports YouTube channel. And even though we have our employees, we wouldn't be able to move forward and keep everything running if we didn't have a really robust team, which includes contractors. Now, it may seem that hiring contractors is easier than hiring W-2 employees, but there's still legal obligations that you have to comply with, particularly reporting requirements to the IRS. Like W-2 employees, there's certain documents that you have to file in January of each year with the IRS. So watch through to the end of the video because we're going to be talking about those filing requirements later. In fact, January 31st is the deadline to file with the IRS. Therefore, you're going to want to know what you need to file and how to do it. Before we get started, I need to remind you that even though I'm an attorney, I am not your attorney. I am also not an accountant. I am not a tax professional. This video is just for educational purposes only and should not be considered legal or tax advice. So the first step is to decide whether or not you're going to hire an independent contractor or you're hiring an employee. And you can't really make this determination if you don't know what it is exactly you want the person to do and what's the difference between a contractor and an employee. So an independent contractor is a non-employee who provides services on or behalf of your trade or business. Now, whether you properly classify someone as an independent contractor or an employee is going to be very fact specific. And it's dependent on the role and the activities that this individual is performing and not necessarily on what it is that you call. So the IRS and the Department of Labor, they don't care if you have an independent contractor agreement with someone. They don't care if you're calling them a contractor or if they're calling themselves a contractor. What the IRS and the Department of Labor is going to look at is what are they doing? How much control are you exerting over them? Are they financially dependent upon you? There's a whole list of factors, and it's going to take up an entire episode, but for purposes of today, I just want to focus on independent contractors and what your requirements are there. So make sure that you subscribe and you hit the bell so that you get notified when I upload the video regarding the independent contractors versus an employee issue. So for today, though, I'm going to assume that the role that you're putting them in is appropriate for a contractor, that you're not exerting control over what they're doing or how they are doing it, and that they have been properly classified as a contractor. Once you know that you need to hire someone and you know that they should be a contractor, then it's important to onboard them. And what does onboarding mean? Onboarding just means you're getting them prepared to start working for you. So when you start onboarding someone, it's going to be important to go through a couple steps. First, you want to make sure you tell them what you want them to do. Second, you're going to be telling them how much you're willing to pay them for and what you're willing to pay them for. Third, when are they going to start? And then once they get all that information, they're either going to accept everything that you just told them, or they're going to try to negotiate a little bit on, I can do this, but I can't do this. I want to get paid this. I'm not willing to be paid that. Then once you've taken all of those steps, they've agreed to start working for you. At that point, they then work for you. Which leads us into the second point, which are what are some best practices that you can implement in your business to make sure that you're able to meet your legal requirements as it relates to the contractors. First, have them sign an independent contractor agreement. This doesn't have to be something that is super long or lengthy or requires a lot of legalese, but it's really important to have down in writing what it is you're asking them to do, how you're going to pay them. Are you paying them for expenses? Are you reimbursing them for their hotel, their travel, their food? How long is the agreement for? Just the whole point of having an agreement between you and your contractor is so that everyone is on the same page. And I would much rather, as a small business, you have something in writing than for you not to have anything in writing because you think it's going to be too expensive or it's too complicated. And one of the main key points that you want to make sure you have in your agreement is that you are going to require that they complete a W-9, and you are going to be complying with your IRS reporting requirements by filing a 1099 in January. Which leads to the second tip, which is have them fill out and complete the W-9 prior to them working, preferably, but definitely prior to you paying them. The W-9 is the request for the taxpayer identification number and certification form, and it can be found on the IRS website. I have linked below, though, a link to the W-9 that is in effect and on the IRS website the date of publishing of this video. As you can see, the form requires basic information from the contractor that you're not going to know unless they complete this form or they provide this information to you, such as their name, if they're working under any other DBAs or other business names, their tax classification, what their taxpayer identification number is, and this is usually going to be their social security number or is going to be their EIN, and what their address is. You are going to need to use this information later on in January when you're completing your reporting requirements to the IRS. Now, should you do this if you're only planning on paying the person, let's say $400? And the reason why I use that number is because your reporting requirements to the IRS only gets triggered if you pay a contractor $600 or more. So if you're only paying someone $400, that's the plan right now, then you aren't necessarily going to have to file a 1099 NEC for them later on. However, this $600 is cumulative, it's not one-time payments. So if you're paying someone $400 and it's the beginning of the year or the middle of the year, and there's any chance whatsoever that they're going to continue to do work for you, then yes, even if they're not going to meet that $600 threshold right now, you're going to want to go ahead and have them complete and return to you the W-9. If it is, say, December 31st and you're paying them $400, then no, you don't need to get the W-9 from them because they're probably not going to reach up to $600 by midnight. It is always just a good idea to go ahead, if there's any chance whatsoever that you're going to work with this person again in the future, go ahead and get the W-9 from them now. Now, what happens if they refuse to give you a W-9? This is going to be hard to hear, but frankly, you just don't work with them. The whole point of this channel and what we're trying to be able to show you is how to be a profitable and a legitimate racing business. And part of being legitimate is also following the laws and making sure that you're legally compliant. You have a legal obligation to report any payments that you have made to any contractors who performed services for your trade or business throughout the previous year if that amount is $600 or more. You are legally required to do that. Technically, they are also legally required to complete the W-9 if you ask them. But if there's going to be any sort of issue, then I just wouldn't touch it. If they only want to get paid under the table, they don't want to get a 1099 at the end of the year, I wouldn't touch it. Because one, it's not going to be legally compliant. Two, you're not going to be able to make that deduction. You can't deduct contractor expense for $600 or more if you don't have a 1099. And three, why would you then pay taxes on the amount that you paid someone else? They should pay their own taxes. Have that conversation. That's why I said it's best practice to have that conversation up front when you're looking at hiring someone to be a contractor, is the fact that you are going to require a W-9 and you are going to be issuing 1099s if you are legally required to do that because they have met that $600 threshold. If you don't require a contractor to complete the W-9 at the time of hire and prior to payment, then it might be very difficult for you to get that information from them later. You're not going to have the leverage over them that, hey, I'm withholding payment until you comply with your legal obligation to give me this information. You're not going to have that over them, and therefore you're going to be stuck in a situation in which it's January. You need to file 1099s. You want to be able to write this off. You want to be a legitimate business, and you're not able to do that because you can't find the person or they're just flat out refusing to give it to you. So don't put yourself in that situation. Just go ahead, have it part of your onboarding process that when a contractor gets hired, you have them complete and return a W-9 to you at that time. All right, now what exactly needs to be reported to the IRS? On January 31st of each year, you are required to report to the IRS any payments you have made to contractors if the cumulative amount throughout the previous year is $600 or more. In order to report this, what you do is you use what is called the Form 1099 NEC, which is the non-employment compensation. This is not the same as the 1099 miscellaneous. We're not going to worry about that form right now. It's just the 1099 NEC. On the 1099, as you can see here, it is requiring that you provide the contractor's name, their address, their TIN, which is that tax identification number, and the amount that you have paid them throughout the year. You can find a copy of the 1099 on the IRS website, but we have also linked below the version that is in effect at the time of publishing down in the description box so that you can easily access it. In addition to reporting this information to the IRS by January 31st, you also need to provide a copy of the 1099 NEC to your contractors by January 31st as well. Now, all of this information is going to be included on the W-9. If you were following best practices, you had the contractor fill out and return to you prior to you even giving them the first payment. So you should be good. But if you didn't get all that information from them the previous year, that's okay. In limited circumstances, it is important for you to have the signature and the actual W-9 completed, but for the most part, it's just really important for you to have this information so that you can complete the 1099. So if you're able to reach out to them and get them to tell you over the phone or get it in writing, then you can gather all that information out, complete the 1099s, and get that submitted. So don't freak out if you don't have the actual W-9s completed, but you're trying to get these 1099s completed, which is here's where the penalties come into play if you don't get those filed. Now, one of the other best practices that I can say to do is to make sure you're keeping track of how much you're paying your contractors throughout the year. When you are a legitimate business, you have what is called accounting books, and that is where any expenses that flow out of your business and any revenue that come into your business, you are actually categorizing them and you are keeping track of them. One of the expenses you should be keeping track of is how much you are paying the contractors. So if throughout the year you have been keeping track of your contractor payments and who you are paying and whether you have W-9s for them, then it makes it very easy for you to, one, identify which contractors you need to report to the IRS, and then also, two, how much it was that you actually paid them. Finally, what happens if you just don't file them and you just don't comply? If you don't file by January 31st, then there is a $50 late fee for each 1099 that you haven't filed. If you don't file by August 31st, then that late fee goes up to $110. Now, if you file the 1099s after August 1st, or you just don't file them at all, then you get a penalty fee of $280. And then if the IRS determines that you intentionally did not file the 1099, then there's a $570 fine. So almost as much as the amount that you're trying to write off, the $600 or more, you're now being fined $570 for each of the 1099s that you didn't report. In addition to these fines, it's also possible to get audited by the IRS, which is also probably how they've determined that you didn't file the 1099s to begin with. So if you get audited by the IRS might also not just check to see whether or not you filed all of your 1099s, but they may pull in the Department of Labor and together decide whether or not you even properly categorized these people as independent contractors to begin with, or if they were misclassified and they should have been employees. And if they should have been employees, then that means you have payroll issues. It means you didn't complete an I-9 for them. It means you might have overtime that you now have to pay. Did you comply with the minimum wage requirements? It just opens a whole Pandora's box that you don't want to have to get into. The IRS may also revert back the deduction. So if you're not able to demonstrate that you actually paid the contractor for services and you're not able to demonstrate that you filed the 1099, then the IRS may come in and say, okay, well then you can't take that as a deduction, which is where, circling back at the beginning of the video when I mentioned, why are you going to pay taxes on money that you paid someone else for services that they performed? To me, that doesn't make any sense. So you want to make sure that you're running a legitimate business, you are following the laws, and that you're able to write off everything you possibly can legally. In order to do that, you need to make sure that you are complying with the reporting requirements that the IRS has put in place. If you thought this information was helpful, it would be so helpful to us if you would like it. Also, please comment below if you have any content suggestions for us to cover in the future. Until next time, we will see you in one of these next videos.